Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Tuesday. It's a little bit of a lighter news day today, but we do have Donald Trump addressing Congress tonight. So there's that. That's going to be interesting. Well, let's go and see what we've been doing overnight. Well, yesterday, let's start with the S&P 500, because yesterday we were expecting a bounce. And we actually did kind of get that, but then Donald Trump said something about tariffs, and the market sold off. Now, of course, he was saying that the tariffs are still going through. We all kind of should have expected that the tariffs are going to go through. So this is really more of like a sentiment change more than anything. It wasn't like necessarily new information, but we sold. Let's come over to the treasuries here. It was pretty good buying through most of the session. We can see that we extended those highs overnight. What about oil? Well, so oil took a pretty good hit yesterday. Now, when we were trading, I wasn't really sure what was going on in oil, and I couldn't really sort out, why we weren't getting moves in the flows. And then, of course, I'm not sitting at my computer all day. I was watching the kids. But at some point during the day, OPEC basically has decided to increase supply. But Donald Trump has convinced OPEC to increase supply so that oil prices will come down. So there might be more room to run here. We're coming up into some like long-term support levels. I think that we might just crash down through those in oil. Gold is kind of on the up, recovering after several bad sessions. That's a pretty good recovery there. Silver, not as much, but we'll work on it. I'm sure at some point, if gold really takes off, silver will too, and then silver will be like the huge risk leverage play. But for now, it continues to straggle. Copper still kind of middling around down here, and the Japanese yen actually a little bit higher, and the dollar a little bit lower. That's interesting, because you would think that with the tariffs and everything, that would probably lead to some dollar strength. So I'm gonna have to think that one through. And we got Bitcoin giving up almost all of the gains that it got over the weekend. Okay, so our reloading the chart over here seems to have fixed that problem that we were having. So, cool. Pretty wide gap this morning, though. Very interesting. Very interesting. So that's something that we need to keep in mind, because that means that the market makers are probably going to keep it a little bit more loose. And I can see that there is not as much liquidity on the first few prices as there usually is, right? Normally we're like 4,000 at most of the prices, and now we're only 3,000 at most of the prices, and on the inside few prices only like 2,500. So the market maker is holding a wider spread than usual in the treasuries, which means we kind of have to be a little bit more precise, right? Good morning, everybody. Why are you calling my audience gooners and knuckleheads, guys? Come on. I have an excellent audience. Adam asks, why aren't you full-time trading? I would not recommend becoming a quote-unquote full-time trader, especially not a full-time futures trader. The reality is that the amount of edge that we can grab as retail traders is very, very limited and inconsistent, and it's a shitty living. Most of those people that you see out there that they claim to be full-time traders, they're probably making more money from their content than they are from the trading. That's how normal people, I mean, maybe. I understand that, but I don't. Does not mean. Let's not say that it's normal people. It's some groups of people do like to do that. Yes, you autists are scared of people, so you don't. Yeah, that's exactly what it is. No, it's 100% what it is. I do not excel in that environment. I don't. Most of the jokes will go over my head. Not because I'm autistic, but because I'm not paying attention, and it takes me a while to figure it out. Just saying. Love the honesty. Well, I think that the number one thing is integrity. If I was building my channel on lying to you, then what's going to happen is eventually people are going to find out that they're lying to you and they'll leave that way. Or, you know, you're creating a community based on dishonesty. Eventually they'll be dishonest to you and backstab you. So, like, the number one thing that we got to do is we have to have integrity. And integrity means, you know, doing the right thing for other people, even when it's not convenient. And the right thing is to tell you that if you day trade, you have a 95% chance of losing money. And even though I do okay sometimes and I tread water most of the time, it's not something that I would recommend to people to try and make their living on. So I do not recommend trying to become quote unquote full-time traders. I mean, so there's a larger thing I want to talk about today. Because the big thing that's happening today is that Donald Trump is addressing Congress. So, with Donald Trump addressing Congress, do you think that there are some plays coming? Almost certainly. I've seen quite a lot of chatter that there was some pretty big buys over in different cryptocurrencies ahead of Donald Trump tweeting over the weekend. So the big thing that I'm starting to see Reddit talk about a lot, and I think that we're going to see a lot, is discussion about whether Donald Trump and his inner circle are quote unquote insider trading. Or we shouldn't call it insider trading, but are they making money from these plays? And I would say almost certainly. Almost certainly. And you're a fool if you don't think that that's been happening for your entire life. Because let me tell you something. What you got to come down and look at this and ask yourself, why does the market exist? What is this there for? Well, I'll tell you what it's there for. There are some people that have information about the supply, and there are other people that have information about demand, and we need to get that information into the same place so that we can come up with a reasonable price. We can't come up with a perfectly efficient price, but with a reasonably efficient price for the economy to function, to balance the competing demands of supply and demand. And in order to do that, we have to pay them for that information, right? If there's no way for them to make money from that information, then it is to their advantage to just keep that information to themselves. So the market is an information transfer mechanism where people are paid for transmitting that information to the market. That is why The market is a wealth transfer mechanism that transfers wealth from the impatient and the uninformed to the patient and the informed. There are lots of great things that you can look at. Okay, I'm not going to say that a chart is completely useless, but there's a little bit of usefulness in a chart. There's a lot of usefulness in order flow because it's the pure data, and you know when you kind of summarize that data into price, you're losing some information, right? So there's a lot of useful information in price, but that stuff is mostly only going to get you break even. Where is the real money made? It's from being informed. The whole thing is set up so that the market maker and the informed trader split the money available. And they want to get as much of that as they can, and they want to prevent any of you from actually making money, right? The only way that you can combat that is to also be informed. That's what it is. Everybody thinks that insider trading rules are there to protect you from trading when you're not informed, from trading at that disadvantage. We're not going to let anybody that has that information trade. That's not why insider trading rules exist. I mean, I'm sure that they probably say to some extent that that's why insider trading exists, but I'll tell you why it really exists. It really exists because that information belongs to the company, and the company is the one that's supposed to be able to profit off of it. It is. There is no substitute. There is no way to compensate in markets for being uninformed. If you want to make money, you have to do your best to be informed. And the reality is that in our place, we have access to limited information, so you can make money, but it's going to be tough. But on the other hand, the thing that's crazy about it is that what has been the great innovation, what has been the great change in the world in our age? It's democratization of information. You have access to more information than anybody ever before you, any other generation. And for some reason, we've convinced everybody that the way to trade isn't to try and be more informed and utilize this new technology to sniff out what's actually going on in the world. No, instead we've convinced everybody that the way to trade is to look at 50-year-old technology and charts. It makes no sense, right? Be informed. So the big question is, are there plays? There almost certainly are. One of them is that there's been a couple of different companies that have all announced, like TSMC, that have announced pretty significant investments in the United States. I'm sure that he's going to name all of those. I don't know if, because we already know those. Maybe companies that are likely to do more investments. I would probably look at car companies, would probably be a big one. Car companies and semiconductor companies. I would also look at rare earth mineral companies. He hasn't really named anyone in particular, but I think, and maybe he won't. I always kind of hope that he's going to name my company, but then, or not, one of the companies that I own rather. And he never does, but I would expect the rare earth mineral kind of sector to be up. And no one can predict how markets react to... You can. You actually can fairly accurately. The problem is that people are using a framework that doesn't really work, right? So most people utilize two different frameworks. I'm just gonna go. So I just had a whole thing. I think that I said everything that needs to be said about that thing. So let's go into another thing, because this is something that I love to talk about. Okay, corkscrew. So the framework that you need to work from is that we're predicting future orders. Okay. So if we know that Donald Trump is going to talk about a company tonight, then what we really have is we have a piece of information that predicts future orders. We know that people are going to hear that and they're going to want to go out and buy that particular company. So we're going to buy it before them. That's what really predicts what the markets are going to do, is you have to predict the orders. Okay. So most people, when they're trading economic events, work from two different frameworks that are both very flawed. The first framework that they work from is that, is this good or bad for the economy? And then they trade whether that's good or bad for the economy, right? So if we come out and GDP is lower than expected, then that's bad for the economy and we should sell. And if it comes out and GDP is higher than expected, that's good for the economy and we should buy, right? And this is extremely flawed. Anybody that's ever traded for more than a month and has ever looked at an economic event will probably tell you that doesn't work. And why doesn't that work? Well, because it's about the orders. If the economy is doing poorly, if GDP is lower than expected, that means that the Federal Reserve will be able to reduce interest rates. And that means more money available out there to be able to do things like buy stocks. That's future orders. So lower GDP actually tends to result in treasuries going up and equities going up. And vice versa. If GDP is really good, then you often have the S&P 500 sell off a little bit because it's like, oh, they're going to keep rates high, right? It's about the orders. It's about the orders. The other framework that people work from is that things are priced in, right? That the market is trying to price in what GDP is, and so they will look at, all of the analyst estimates, and then we look at what it was from the analyst estimate, and based on that, we're going to buy or sell, right? Okay, well, that's not a bad way of going about it, but it's incomplete, right? So changing expectations about future economics and future orders can be a reason that people buy or sell. So coming in and you expected the GDP to be this, and now it's this, and you can trade on the difference between what you expected and what it actually was. There are going to be some people that trade on that, right? But we have to factor in all of the orders that can come through. There are going to be other people that already had positions on and are going to take profits off of that when it comes through, right? So you have to factor in people's existing positions. You have to factor in what the orders are going to be, all right? So once you build a framework that is based on predicting orders rather than trying to trade it purely off of, that's the kind of the funny thing is like fundamentals versus technicals. It's kind of like that framework is kind of unhelpful towards figuring it out, right? Because the real truth is it's all about orders, and it doesn't matter what kind of category of information it is. The only question is, does this piece of information accurately predict future orders? And then we have to collect all of the pieces of information that are going to predict future orders in that instance in order to make a reasonable prediction. Okay. So, yeah. And the other issue with the idea of like that things are priced in is that some things can't be priced in, right? Some orders are going to come no matter what. Like you cannot price in how end of month buying, rebalancing, right? We can come in and we can say we know that equity or risk parity funds are going to have to sell their bonds and buy stocks. That's basically from what I can tell they did last week, right? And it doesn't matter how high the market goes or how it changes. They still have to buy, right? So once you realize that it's the orders that move markets, you can't price in orders because there are some orders that are going to come in no matter what. kind of part of why markets are inelastic, right? Which is to say that if you put like $1, take $1 out of the treasuries and put it into stocks, you'd think that that would increase the market cap $1, but actually it increases the market cap like $5 to $8. So do you throw down huge size on economic news? Sometimes. Not huge size, but you can actually make pretty good predictions about some economic numbers. Unfortunately, most plays, like holding a position into the numbers, is too big of a play for me to make. But I will absolutely make plays afterwards. Because again, it's about the future orders. So like, you know, the market is informationally efficient theory of things would say that as soon as the number is out, the market jumps to the price that's accurate at that point, right? But that's not what actually happens. What actually happens is a bunch of orders come out and we move to a price based on the number of orders that came out. And if I can predict that there are more orders on the way, then I have a good trade. And yeah, some of the best trades that I've made have been shortly after news releases like that. Makes sense? Got to up all the pot cost bases? Sure. So currently, the buyer side cost basis is at 111.22 half, and the seller side cost basis is 19. I want to point out again that the gap between these two is unusually wide, which suggests that market makers are going to hold a larger spread. And you're not going to see that like directly on the DOM because, like, you know, the spread in futures is almost always the one tick, but you can see that they are putting a little bit less liquidity on the inside. So we'll see. They might come back to 22 half. I think today is a tough play because there's a lot of economic data to come out later this week. We don't really have anything today. The big thing today is Donald Trump's going to be addressing Congress and the aftermath from tariffs and everything else like that, right? Well, we might get some tweets. Probably we should expect there to be some, you know, headlines and so forth come through, or like we should be on our toes. But until then, I would kind of expect us to middle and you know, so maybe we might eventually come back to 22 half, and it's anybody's guess as to when it does it. But I'm not expecting a strong trend today. Not expecting a strong trend today. Now, the other thing going on is the Ukraine thing, right? And what I've seen with this is yesterday there was a report suggesting that the Trump administration was looking into pulling all military aid from Ukraine. And then they asked Donald Trump about it, and he denied that. And then that night, I think it was Bloomberg, I don't remember who it was, but then another report came out saying that actually, yes, the Trump administration is going to pull all military aid from Ukraine. I have not seen any confirmation of this from the Trump administration itself. And my kind of observation on this sort of thing from the past is that you can't really trust it until it comes from the Trump administration. In fact, something that I think that they do is the administration will go and give the media straight up false stories, right? They'll say, oh, we're pulling military aid from Ukraine, primarily to make everybody on that side of the negotiating table freak out. Right? And then they come back to Trump. Oh, we're not going to do that. But I guess we could. You know, now that they've experienced, you know, the fear and what it looks like when you go against Donald Trump, then maybe you're going to be more likely to want to negotiate with him. As it's kind of the tactic that he uses, I think. So I would expect there to be more fireworks there. I don't know if that, I'm not saying that story is false. I'm just saying, like, let's kind of wait and see. Might see more on that today. The other story that I heard was that they were going to pull economic sanctions from Russia. That would be a huge deal if they did that. Kind of skeptical that they would, but it could happen. Might be a big deal. Because this could be okay. You don't want to play with us, then we're gonna make your life hell. Yeah, because I mean, really, what kind of seems to me, and at least I think probably what the Trump camp is going to think happened was that Zelensky never had any intention of signing a deal, and was just trying to play them to make him look foolish. And if that's the case, then I think that what he would do is be like, okay, if you're going to move against me, then you're going to die, basically. I'm going to leave you to the wolves. It's what he might be doing. I'm not saying that with pleasure or anything like that. I'm just trying to predict what might happen. Is he signed the deal? I saw a poll yesterday that kind of suggested that so far the American public backs the president on this. But this is going to be very interesting to see how this plays out. This is the sort of thing that could like make or break a presidency, right? Just like with Joe Biden and pulling out of Afghanistan, right? That pretty much set the tone for his whole presidency and killed his presidency in its infancy. Well, I'm gonna kind of poke around now and see if we can find any other information for us. Trade wars begin. All you need to know. Oh, I can read this story.
Block by.
Okay, this is from Hot Air. Title, Unsurprisingly, Americans back Trump over Zelensky. Two polls have been released since the Trump Vance Zelensky dust up, and neither looks good for Volodymyr Zelensky, a man who needs an easier name to spell. One of the polls was more generic, done by YouGov and explained by the very capable Harry Anton on CNN. It very clearly shows that while Americans are split on how far we should support Ukraine, Trump's approval on handling the war is 24 points higher than Biden's. There is by no metric, good news for the forever war faction of the transnational elite. While the same people have been posting Ukrainian flags on their social media profiles, remain totally committed and are still angry at Trump for wanting to end the war, the American people as a whole are tired of the war and would like to see it resolved. The more interesting poll is a bit weird and is better in some ways and worse in others when it comes to reality. The poll is done by the always interesting Two-Way, a show run by Mark Halperin. Mark Halperin has done an outstanding job covering politics on his show. Blah, 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 blah. I will encourage you to watch the show, but I will give you a quick rundown of how the poll was done and what they found. The distinctive thing about the poll was that after some more general questions were asked, voters were required to watch an 11-minute clip of the confrontation between Zelensky, Trump, and Vance. While not as good as having them watch the entire exchange, it puts more context in the conversation than most media coverage provides. The results weren't good for Zelensky's supporters. Although Americans by a small margin like Zelensky, they thought he was rude, didn't have the cards to negotiation he wants, and that the war needs to end. In short, they agree with Trump even if they don't care for him. 31% of Americans think Ukraine should fight to the bitter end, which is about what you should expect if you ignored the bravado media and understood American politics in the least. Americans don't like long wars in the least, and enthusiasm for wars declines relatively quickly. Trump got elected on a platform of negotiations, and both this poll and the YouGov poll shows declining support for continued fighting. Similarly, Americans don't support Zelensky's maximalist goals of winning back Ukraine and the Donbass. They are not hostile to Ukraine, but want Zelensky to be realistic about his goals. Almost every hardcore supporter of Ukraine I have spoken to says that their plan to end the war amounts to pushing Putin out of every inch of Ukraine pre-2014 and deposing Putin. That is not a strategy, but a pipe dream. He's right. He is totally right. They're not. We really do not have the ability to force Russia out of Ukraine unless the West is willing to put boats on the ground. And nobody in the West is going to do that. Nobody in the West is going to do that. Okay. Zelensky has banked a lot of goodwill in the United States. I've marveled at his skill in rallying support, and the media's campaign has, some of this is a little bit too partisan for me, but that's okay. It's helped dramatically. In this case, I'm using propaganda as a descriptive term, not a prerogative. Zelensky's job is to make himself look good to people, and until recently, he has been masterful mostly. Now, here is where the rubber meets the road. After watching a video of the conflict in the Oval Office, what did Americans come away thinking? Their opinion of Zelensky was not dramatically changed, but their opinion about his demands were negative. Zelensky's maximalist demands did not go over that well. People who dislike Trump, but if you look, Zelensky persuaded nobody to his side. His supporters likely hardened their support because they think Trump bullied him, but people open to persuasion were not persuaded away from Trump's position. Worse for Zelensky, Americans didn't take too kindly to his demeanor and the insistence that America will be dragged into the war one way or another. When your words are described as offensive, that is a bad thing if you are coming hat in hand. No doubt Zelensky is angry at how the words of Europeans and Biden being at odds with their promises, but he was stupid to demand Trump cash the checks that others have written. Trump ran on ending the war, and insulting America to prod him into breaking his promises was insane. And lastly, America has little doubt who holds the cards, and implied in that answer that Zelensky should take what he can get and thank us for the help. There is a huge disconnect between the impression the media is pushing that Americans are ashamed of Trump and the reality that most Americans agree with the president. Whether they like Trump's aggression on the matter or would prefer a more diplomatic approach doesn't change the fact that people want out of this war and don't appreciate Vladimir insulting the president and the vice president. None of this should surprise you much. The influence of the media has diminished and the elite opinion has dramatically split from ordinary voters for quite a while. If the Democrats think that playing this up in the longer term will help them recover their popularity, early indications are that they once again are mistaken. Do you think that I just like pull shit, like that I just make shit up? I mean, everything that I say, there's information out there backing it, right? I might be taking lots of different pieces of information and using intuition and making inferences, okay? But I'm not just getting it from nowhere. Thank you, Trump, for lowering... Well, he hasn't really lowered rates yet. There hasn't been a rate cut during his term. But I sure feel like that we need lower rates. Saying they want it resolved doesn't mean they support Trump ending the need to Putin. I mean, I think that this is such a disingenuous framing, right? Just because Americans want the war to be ended and are realistic about what can actually happen from it does not mean that they're bending the knee to Putin, okay? What the fuck are you talking about, illegal immigrant? It was a poll. The whole article was analyzing the poll. Come on. Oh, this guy. Uzi says Biden got mad at Zelensky for the same reasons a couple of... You're right. No, Uzi, you're bringing up, I think, a monumentally important point. That what has happened is that Zelensky has been intransigent on this issue the whole time, that all territory must be returned and Russia must be punished severely for what they've done and whatnot. And Biden this whole time has been telling him that's not really very realistic, but Biden never had the balls to step up and say, like, no, take a deal. We're going to do this. We're going to clean it up now, or you're going to suffer the consequences, right? That's what Trump is doing. And I really think that all of the news headlines that we got yesterday are news stories planted by the Trump administration to scare the bejesus out of Vladimir Zelensky. Oh, you're totally right. He's just, he's going to disagree with it. I mean, the thing is, though, is I don't think that... I think that it is pretty typical Democrat that, reads Reddit too much. They all kind of come to the same conclusions, and there's obvious problems with them, and they just don't see it. One of the, I had that whole rant about being informed. The rant for politics is very, very similar. How do you excel in politics? Be right. Democrats are constantly complaining about, well, our messaging is bad, yada, yada, yada. Nah. But the real problem is you're wrong and everybody can see it. Is that simple, man? It's kind of funny how when we come to some of the biggest conundrums of our time, how do you have an effective political strategy? How do you successfully navigate markets? And the answer is the most straightforward answer that you possibly can get. Be informed. Be correct. And we're doing all of this other stuff that we get in the world that people talk about, and all of these theories and so forth that they get all come about as a result of people trying to people not willing to give up the things that they're wrong or that they don't know, and trying to come up with as elaborate of an explanation as they can to justify still believing what they do in the face of, to maintain that cognitive dissonance, or to avoid that cognitive dissonance. I wonder, I'm just noting oil seeing a decent jump there. I don't know if that's significant. There is some buying in the futures in oil that looks pretty significant to me. The treasuries, well, they had a pretty significant drop there, right? But I kind of said that it was likely that they come back to 22, didn't I? Now, the split side of that is that sellers are not truly in control until 19. So kind of wonder if I should have taken a trade on that one. Like after Octavius scratched. Mr. Trump have big news today? Well, he is going to be addressing Congress tonight. It's the State of the Union speech, isn't it? I can't remember what it is. Just remember that he's speaking. I don't think it's actually the State of the Union. But he will be doing a joint session of Congress. And it will be at 9 o'clock Eastern time. I suppose we could stream during that time. Because you're certainly going to see market moves during that time, I think. Probably. Oh, you know what? You got to do. We didn't turn on the algo. Now is better. Well, nothing right now, but I think that we should stay on our toes.
Block by.
Who wants to watch Trump lie and slur his speech about the 2020 election again? People that want to make money, that's who. You're not listening to anything I've said today. Man. I'm sure that Trump administration insiders are out there preparing to buy certain things today. Like as we speak, they're calling their brokers. So this is what we need to buy this morning. Good, there wouldn't have been a trade, but cool. All right. I'll zoom in a little bit here. Uh-huh. History in the making. Deutsche FX head explains why the dollar is weakening. This is what I need. Let me read this. Oh, this is interesting. There are two mutually reinforcing themes that have been building in recent weeks. The tightening in the US fiscal stance and the broader rise in US uncertainty. We have long argued that a tariff is simply a tax and therefore represents a fiscal tightening with bullish implications for fixed income and ultimately for the Fed and the rest of the world. The key to offsetting the tariff impact in the US has always been spending money / cutting taxes elsewhere. But as we wrote last week, the signaling so far from the administration and Congress has been towards a more conservative fiscal stance to which these tariffs are additive. It is reasonable in this context for market to start pricing in a narrowing of the growth differential between the US and the rest of the world. Oh, the potential loss of the dollar's safe haven status. We do not write this lightly, but the speed and scale of the global shift is so rapid that this needs to be acknowledged as a possibility. We highlight a few developments since the start of the year providing tentative signs in this direction. First, the declining correlation between the dollar and risk assets, which has been at the core portfolio construction for many real money investors over the last decade. That's very true. Second, the unusual, when I say that is very true, like number one, like the correlations between the dollar and like equities is absolutely a strong thing, and there's a lot of people that invest off of it, and that's why we watch the dollar. And we have very much seen over the past year that this correlation kind of breaking down. Percent, we are set on bringing interest rates down in Fox News interview. He's the Treasury Secretary, right? Yep. Actually, old news by a couple of hours. Yeah, that is interesting. Oh, so wait a second. Could that be these weird spikes that we had here and here? Probably this one. Gotcha. Let's just assume that it was. Second, the unusual and simultaneous outperformance of both high and low beta currencies, with the common denominator being cheap valuations versus the dollar. Third, the stark relative underperformance of the U.S. risky asset valuations versus the rest of the world going back 3 decades, despite highly elevated global uncertainty. Fourth, the U.S. current account deficit breaching the 4% threshold in recent months, which has historically marked the limits of dollar overvaluation. So these are all things that this guy at Deutsche Bank is citing are all things that are kind of goals of the Trump administration, to be frank. Like weakening the dollar is kind of a goal of the Trump administration to some extent. But the problem is a weaker dollar, because it loses its safe haven status, is not how they want to do it, right? Our dollar views remain neutral for now, but the key message is that we are becoming a lot more open-minded about the two-sided risks to the dollar. So we are kind of seeing a little bit of zigzag back and forth, and it seems to be kind of across all of the markets, really. I'm seeing some possible correlations here between the E-mini and the treasuries. I don't know. There's lots of things kind of moving, but not like a super clear, like, this is a driver, it's just going to trend it, you know? You know, my NQ trade got blown up. Yeah, that's what NQ tends to do to you. Don't think you'll ever catch me trading NQ. Okay. So that a little bit of movement there. Okay, I don't know who this person is, but I'm hearing over the news squawk somebody saying that they have a talk with Trump scheduled. This must be some European leader. I was going to say it could be just them moving a little bit before the S&P 500 opens. But I think that was... Oh, it was the Mexican president. Okay, Mexico president. We have a call scheduled with Trump this week, probably Thursday. Ah. Oh my gosh, Octavius, that is... See, they said... it sounded to me like meme ball, but you say meatball. That is... That's so funny. Wait, I need to see it. I need to see it actually spelled out. Shine bomb. Shine bomb. Shine bomb. No, that doesn't. My Mexican accent fails me here. It's Uzi's aunt. Is that true, Uzi? Do you know this woman? It's kind of rough when, like, you know, you feel like you know everybody, and then, you know, elections happen and all of the names change, and and I haven't done a good job keeping up. I mean, I'm watching the kids. I have my phone out. I try to read stuff, but for some reason, I just don't do as good of a job when I'm at my phone as I do when I'm at my desk. Maybe it's because I'm watching too many snowboarding videos. That must be it. I should go snowboarding today. Wait, hold on. What's the mountain report? Well, it says 1 inch overnight. A light dusting of snow is expected with a 60% chance of scattered snow showers throughout the day. Skies will be partly sunny. Temperatures will be around 33. Gentle wind, 7 to 10 miles per hour. Significant winter storm is on the horizon. Heavy snowfall is forecasted from Wednesday night through Thursday night. I definitely should go on Thursday. Projections 12 to 20 inches. Okay, we're getting more here from Shine Bomb. Shine Bomb isn't Mexican? I mean, it's not a Mexican name. Claudia Scheinbaum. It's Spanish. I see. That makes sense. So she's an elite then. Is that what it is? It's Jewish? Oh, is it? Oh, okay. Let's do some research on that. The surname Scheinbaum is a Yiddish word that means beautiful tree. Okay, well, I would have expected this news to be like good for the S&P 500, and it's not, but it's not something that I feel like I understand enough about what's going on to take a trade, so. The treasuries are bidding up pretty hard here now, though. It's a 10K change, but I don't know. Is that significant? I don't know. I hope to be back in a second. I need to roll my back. Bro does Pilates. Just foam rolling. But yes, the first thing that I do in the morning is I stretch my back out in the shower. Because all of the joints kind of get seated in there in a way that my back doesn't like for some reason. Wow. News Squawk is saying that the Mexican stock market is down over 1%. So, you know, I used to, every time that somebody would point out that they're in a position or something like that to me, I would comment on it, but I think I'm kind of changing my policy to ignoring them. What I really care about is if you have information, right? That's the most valuable stuff that you can share in chat. So why do we think that the market started to move when it did? Oh, by the way, you know what? I should change this a little bit right here. I see that I have like a moving average listed out there. But the moving 200-day moving average is way different. It's at 111.090. So let me just delete that. Well, listen, if you don't find my insight useful, then why are you bothering me? Like think about this. If you were on a professional trading desk and you talked like that. Okay. Well, guess what? We don't need you here. If that's how you feel. This channel, I view it as a team. If you're not here to be a part of the team, you can leave. Imagine needing to calm your emotions as a daydream. because arguing with live streamers in YouTube chat is going to calm your emotions. This is coming back pretty fast. I don't know about this one. Every reason to be hopeful. Okay. I think that's more from the Mexican president. Oh no, this is somebody else. Do you invest a little bit? My portfolio is not nearly as big as I'd like. Yeah, and I got like a something right here in my neck. I don't know if you can see it. Oh, you can kind of see it. It's starting to really hurt. I have to take care of that. I thought it was just a zit, but now I'm thinking it's something more because it's starting to really hurt. It's like transferring the inflammation to the rest of my neck. That's probably why I'm starting to feel like my neck is. I have a small portfolio. I have Goldman. I've got Rare Element Resources. Got Berkshire Hathaway. That's cool. I can ban all of them. We can sit and ban people all day. That's fine. Yeah, you're totally right, Uzi. Yeah. But you know what? Okay. I was kind of starting to think that maybe illegal immigrant was a different person from the person that had kind of been trolling, and or maybe these were different people from, but no, I think it's the same person from last week, right? But I do still kind of think that it's a different, yeah. But I do think it's a different person from Salim, don't you think? It's kind of like the same tactic, but they just talk different. They just talk differently, and it's kind of weird. There was something about that tick at 24.5 that stood out to me. Even though it looks like it wasn't a significant shift, and in fact, it's been across that price for a little bit. I don't know, man. Kind of a little weird. A little bit of a weird move. Oh my gosh. I just saw a tweet from Elon Musk, and I'm a little bit surprised by this one. Let me show you this. Like I knew that stuff like this happened, but I can't believe it's this blatant. Here. So Charlie Kirk says it's all fake and staged. This act doesn't work anymore. Sad.
When I will immediately bring prices down starting on day one.
That ain't true. That's what you just heard. Since day one of Donald Trump's presidency, prices are not down, they're up. Inflation is getting worse, not better. The prices of groceries, gas, housing, eggs, of essentials. It's not getting better, it's getting worse. Meanwhile, Donald Trump has done nothing. Whose eggs to lower prices? Instead, he's pardoned violent criminals who savagely beat police officers.
He's letting Elon Musk take a chainsaw.
He's letting Elon Musk
literally 3 Democrat leaders all using the same script to make TikToks with. What? That's crazy. That's crazy, man. You know, it kind of pisses me off. You know what pisses me off about it is that it's like every time that something cool comes along on the internet that is kind of like the internet's thing, and then what happens is people in power come along and they start ruining it. And it's not going to be long before, you know, I mean, listen, there's a lot of propaganda on TikTok anyways, right? But it won't be long before that's all that there is there. See, so I'm getting some ticks and like moves that kind of make it seem like that the treasuries are moving with intention, and then it doesn't follow through. This is behavior that I could maybe look at as like a possible continuation, but the cumulative deltas definitely do not reflect this. Yeah, this is definitely something that I have to stay out of. We'll see. Maybe, well, with the way that it's going, probably my algorithm's not going to get a trade either, huh?
Block sell.
I didn't even, you beat me to that one. Oh, what did he say? Are you an anti? No, I'm not.
Trump criticizes Canada for not allowing American banks. So on his Truth Social post,
Trump criticizing Canada on Truth Social.
Doesn't allow American banks to do business in Canada, but their banks flood the American market.
So it sounds like the strategy that Trump's going to be going with in the trade war is pointing out all of the things that Canada and Mexico does that he thinks are unfair. Canada has a lot of tariffs up against the U.S. to protect like their dairy industry and things like that. How did you manage to attract a little online warrior with a girlfriend who wrote? Well, it's probably just kind of luck of the draw. It seems to me that there are some people that they're kind of have like narcissistic personalities, and they like want that validation, and when you don't give it to them, then they attack you like that, right? So probably the best thing to do is to just ignore him and not give him any, because it's every reaction is giving him that dopamine boost that keeps him going, right? So if we ignore him, that will kind of, he won't be getting anything from it. Will increase the chances of him giving up and going away. And they break down, but it's still doing it in I would say a random way. I don't think that there's a clear meta order in this market. It looks like a market that is potentially roiled by headlines, and I mean, we have had headlines, but they're kind of like minor headlines. But you can tell that the market is just touchy, right? They're touchy. So this is kind of a dangerous place to trade. Probably across all the assets. Like earlier we were talking, okay, oil was on a good run. That's come back. The decline in gold has continued though. The decline in gold has continued. It's not that huge yet. Who knows? That might reverse too. Equities are a bit wild. How big of a range is it? 24 point range? Yeah. I mean, but the way that it's moving back, that sort of thing makes me seasick. Watching your portfolio. You know, I never went and looked at how my portfolio did yesterday by the end of the day. That's okay. It's probably best that I don't look at it.
Toronto Stock Index extends decline to fall as much as 1.8%.
So I'm on these subreddits for like computer science majors and like recruiting hell and stuff like that. And there's this constant battle about like, are the tech jobs just all gone? And this guy was pointing out that like, you know, it was super huge and then it just declined precipitously. And he says, nope, it's because those jobs are never coming back unless you're an elite building artificial general intelligence. You're not going to have a job, is what this guy thinks. Whereas I see a market imbalance that can't last forever. VIX is in backwardation, really? Like the VIX futures? I don't know if that's necessarily a reason to buy SPY, but... Says, yep, okay. So like the Trump administration is actually doing something really interesting here. I don't think people understand. So like you have the economy, right? And we can kind of control the rate of growth in the economy utilizing interest rates, because if the growth rate in the economy gets too big, then it blows up. And then you have a really big problem. And so we use interest rates to kind of moderate it, so that when it's too low, we kind of put more money in the system, and when it gets too high, we kind of take some money out of the system, right? Okay. Well, those aren't the only levers that we have. Those are just the levers that and asset purchases are the levers that the Federal Reserve has available to them. But the politicians have a bunch of other levers that they can pull to control the economy. And so what the Trump administration is doing is they're saying, we need lower interest rates. So what we need to do, well, let me go back. The Biden administration said, well, we need to keep the economy going. Things are getting kind of bad. We can't just keep interest rates low because that's creating inflation. So what they did is they kept the economy propped up by creating a lot of government jobs. Republicans didn't like that because that's increasing the size of the government. But that kind of then becomes a lever that Trump can pull the other way, right?
US natural gas,
get rid of a bunch of government jobs,
rise to the highest,
implement tariffs, bunch of other these are all things that
S&P 500
kind of lead to a little bit of money coming out of the market,
$1 trillion in value,
so that we can then lower interest rates. It kind of seems to me like the Trump administration is trying to intentionally guide the economy where they want it to go, which kind of suggests to me that you could see a volatile stock market through all this year, but that if it gets too bad, Donald Trump probably goes and pulls another lever that makes everything look good, right?
So just a reminder, in about 10 minutes' time, we're expected to get House Speaker Johnson speaking at 10 a.m. Eastern Time.
So probably a situation that favors buying the dip. It's just a question of when.
Up to the video.
Usually near the 200-day moving average, but now we are GEX driven. Oh, yeah. And for some reason, I've been seeing a lot of stuff about GEX. Why is they calling it GEX? We used to just call it Gamma, spot Gamma. Why did this GEX term take over? Marketing. Yeah. Like usual, we're ahead of the curve, and then when it becomes a popular thing, we don't benefit from it because people changed the name of it. S&P 500 erases the election game. You know, it's so funny to me that okay, so like if tariffs are so absolutely terrible for the economy, and like listen, generally they are, but that doesn't necessarily mean that it will, you know, that the market's going to decline today, right? We're just got to be clear about that. But if tariffs are going to be bad in this situation, we've only just retraced the move up that we had after Trump won. So like, yeah, the market declined, but it was like gains that were maybe kind of like shouldn't have been made in the first place, you know?
Mexico's President Shane Baum says U.S. tariffs.
People, we have such a short memory, right?
Bilateral North American Trade Pact.
The American public has such a short memory. NASDAQ approaching its 52-week moving average. Well, I think my understanding is that we should probably continue to sell throughout the week because yesterday we hit pretty critical CTA levels. So now the CTA is a headwind to the markets. Yeah, it's going to be rough. It's been about 2 years since it was below 52-week moving average.
Sheinbaum adds that
Probably since 2022, right?
Treaty violation should be addressed. So Brent oil slips below $70 a barrel for the first time since October.
January 2023. Okay. Whoa, okay, that's sick.
Kazakhstan's energy minister.
This guy made a gif of a raptor and a bear fighting. Oh, the bear is winning.
Sheinbaum adding that Mexico's agricultural exports, such as avocado, could go to other nations.
That's an amazing animation, man. Premier of Ontario to shut off power to 1.5 million customers in New York, Michigan, and Minnesota. Yeah, I'm sure that's going to help you. Treasury's still kind of oscillating between 24 and 26. Seen a little bit of a larger decline in oil now. Gold still seems to be hurting. The dollar, I'd say strengthening through most of the session here. Yeah. Market makers are leaving an 8-tick range with no MBOs, no edge. Prices can fly up and down. Yeah. Interesting what we saw. It is kind of consolidating a little bit. You can see the lines are getting closer to each other. But it's interesting how I could immediately see that they're holding a larger spread than usual. And now we have indeed seen it come out in the actual action that instead of, just going in 2-tick range forever, now it's like a 4 to 8-tick range. Considering the action delta attack activity is pretty muted. Yeah, I mean, I guess we did have about a 10,000 change, which is about a normal move, but it kind of looks to me like that there's a lot of cross currents. Like Market maker is probably enjoying this because it's a bunch of day traders trying to react to headlines when it's not really enough to really move it.
Anyone well. Reeves says that even if tariffs aren't applied to the UK will be affected by slowing global trade.
They're just getting all these world leaders commenting on things. So now I'm hearing the UK Prime Minister commenting. But again, like, none of them seem to be saying anything that is really consequential. The spice must flow.
US crude futures fall to $66.77 a barrel, the lowest since.
Well, so you know what I'm noticing is that the cumulative delta in ZB has been pretty much sell the whole way. I'd also say that it's been selling in ZF a little bit, but not to the same extent. It does look like a steepener is coming through the market. So there's a steepener coming through the market, but there are also some signs of like profit taking. It's kind of mixed, and again, it's kind of mixed and all over the place. So I don't think that I end up taking a trade today. Let's just watch it. But it is an interesting market.
Maybe taken in response to your.
This is a kind of market that I can remember.
If tariffs remain in Mexico.
I mean, it's been a very, very long time since we've seen a market like this, but I can remember trading market like this and getting absolutely destroyed. Absolutely destroyed. EU proposes a $150 billion defense loan. Wait. That's kind of oi because it's like that's the best that the Europeans can muster up. It really must be bad. Big offer in ZF filled? Was that at the 15? Seeing a little bit of a shift in oil here now, and the dollar is shifting too. And gold is shifting. No, they're all turning. They're all turning here. I don't know if it will last, but there is a short-term reversal that's starting to form here across the board. You've had a Xian Long? Oh wait, I said I wasn't going to comment on people's positions. I'm not going to comment. Did move a little bit more. Oh, in fact, it's given me some reloading right there. In this situation, I don't take the reloading though. I don't think so. No. Does perk my interest though. What the heck? I got rejected by Formula One because I couldn't attend a 6-hour group interview in the middle of a workday. 6-hour group interview? That's crazy. I have never heard of such a thing. Man, I'm really curious to see if the Canadians cut off American electricity.
Europe Stock 600 extends fall, now down 2% for the biggest daily fall since August.
Ooh. Okay. Maybe the continuation was a good play. I think if I had taken that one, I would be taking at least one contract off at 29.5 in front of that big order at 30, huh? It's pretty good shift in Delta coming through as well. But I think, oh wow, yeah, I think it's coming from like
Treasury
flight to safety.
On Chevron oil license in Venezuela.
Short covering there. It's just like all this volume puked out all at once, yeah. You know, it may actually be market makers unwinding positions in that situation. Oh, no, I take that back because there wasn't that much short. I'm definitely seeing buyers take profits though. Yeah, it's a risk off. I mean, the major driver here is definitely risk off flows, right? This is a real flight to safety panic bid in the treasuries. It's been so many years since I've really seen a true, like during COVID, the way that it happened in COVID was kind of like short and wasn't the same thing. Before COVID, I can remember many times where, you know, the S&P 500 was down and you would see these good trends in the treasuries. And those were like some of the best, most consistent trends you'd ever get. Well, this one doesn't really qualify as that because it's been pretty wonky today. But when they did break through, they broke through in a big way. So that's worth noting. There is definitely some panic in here. And, you know, in the treasuries overall, I've felt for a long time that the treasuries were oversold anyways. So
Traders price in more than 50% chance of Fed rate cut in May.
Ooh, interesting. Newsquawk is just telling me that there is now a 50% chance of a rate cut in May. That would be big. they kind of came back here. So that first kind of target
Chevron
area was
authorized to
good.
operate in Venezuela until April 3rd.
Octavius is going for the hero. Now, if it trades it, maybe. I could see that. I could see that one working. It's kind of like looking at where it is right now. I'm a little bit worried about touching it.
Trump says if companies move to the US, there are no tariffs. So again, Trump says if companies move to the US, there are no tariffs.
If companies move to the U.S., then there are no tariffs, says Donald Trump.
Sheinbaum adds that if US tariffs are continued, Mexico will need to develop a diversified trade strategy.
Guess I should recenter things. I kind of feel bad that like I didn't take that continuation reloading, but it was like I didn't have any information to say that there was going to be more meta order coming out, and it was kind of a dangerous market. So I still stand by my decision to not touch it. It's a pretty good move. You don't see moves like that every day. That's the thing. Like, it really gives me a rush to see them push through like that.
US 2-year Treasury yields declined 10 basis points to 3.
There's a job that I applied and interviewed for recently being reposted today. That's not a good sign.
According to Interfax, Kazakhstan to send updated compensation plan to OPEC. Also, Mexico's President Shane Baum ends daily press conference.
Man, this last bar in the S&P 500 is ugly.
Also seeing UK 2-year gilt yields lowest since February 10th, down about 8 basis points on the day at about 4.127%.
It's a decent amount of volume here. Okay, so that kind of short-term reversal that we're kind of seeing, it is definitely. Well, you see that in the dollar? Whew. That was where I was like, okay, there's at least a short-term reversal happening, and now whoop. Gold getting killed on the backs of this again. It was like, just as soon as I kind of understood maybe why the dollar might be down overnight, and then it just comes back with vengeance, right?
Just a reminder for the bottom of the hour, Trudeau speak on CBC. So Trudeau to speak on CBC. Trudeau's to announce Canada's response to Trump trade war. That's according to CBC on their article. So a reminder what Trudeau said previously in a statement last night announcing Canada's initial response. Trudeau suggested that the federal government is prepared to go beyond counter tariffs alone to try and get Trump to back down from tariffs that have the potential to plunge not only the Canadian economy into recession, but also inflict economic pain on American businesses and the workers they employ. We have also posted out the video for you to watch on the Financial News feed again of Trudeau speaking at the bottom of the hour.
It's trying to dig its way out there in E-mini. The treasuries have definitely come back, haven't they? How's the imbalance strat doing? It hasn't taken any trades since last week. There just hasn't been. I mean, we had a lot of really good imbalances last week and at the beginning of the week, and then since then it hasn't done any. Oh, you caught that Octavius. That was an amazing call. I'm not even necessarily detecting like
Kazakhstan plans to
counter flow in this situation. It really does look like that was just like there was a panic bid there because like the S&P 500 is falling and everything, I guess. And now the market makers are just letting it fall all the way back down. Like nobody's really holding it as it comes back. You think they make it all the way back to 24.5? That would be the cost basis. If it comes back to 24.5 and bounces, that's going to be like... That would be such a crazy... If it really did. Because how would you explain that one? There's nothing special about that price that you can see from the price chart.
Traders pricing a 95% chance of a Canadian rate cut on March the 12th.
Traders are pricing in a Canadian rate cut now in March. We should recenter. Okay, it's coming. It's now touched cost basis. So let's see if it bounces or if it goes through this time. Okay. It's not looking good. Are spoos gonna retrace this whole thing? They're really starting to come back with vengeance. The treasuries have given up that whole move. So they went through it. It's not bouncing. What it does is it's like a hard bounce to the tick. So I think there's a pretty good chance that we go to 21.5 now.
S&P 500 consumer discretionary sector falls 2.7% to the lowest since November.
Gus, good morning. I have to admit I'm pretty shocked that it retraced this far after it being such a crazy strong trend on the way up. And it's not that there's not an imbalance on the way down, but it's just not nearly as aggressive, is it? But you could see here on our market imbalance algo, it would never got triggered on anything. I'm surprised that this did not trigger it. That's pretty crazy.
S&P 500 industrial sector falls 2.1%.
Okay, so here's 21.5. Home Depot says that Americans may soon embrace sky-high mortgage rates as the new normal and invest in housing anyways. Lol, Home Depot hopium. Yeah, I don't think that that's going to work because I don't think that anybody can afford it. They're not getting into houses because they're balking at the high prices and they think they can get a better price. It's because they just literally can't afford it. You know, I do kind of wonder though. So one of the things that's going on is like China is imposing heavy tariffs or like they're stopping the import of American lumber. So will that mean that there will be an oversupply of lumber in the US now? So I wonder, hey, do we how do I see lumber futures? So I don't think they have them on the CME, do they? Lumber futures, LBR. Oh. Maybe. Maybe. Says it's loading. Guys. Huh. Okay. So that kind of
I am ready to
that kind of kills that theory. Price of lumber futures is going up. If lumber got cheaper, I would be happy. Not that I want to build a new house, or I would like to build a new house actually, but I want to build more furniture things. Well, what's too expensive now?
Ontario to issue 25% export tax on electricity to the US, according to the Wall Street Journal. Wall Street Journal citing interview with Ontario leader Doug Ford.
Oh, okay. So I'm just hearing now they aren't going to shut power off
Also,
to the Americans. They're just going to impose a tariff on it.
Around 10% of GDP to deter war with China.
Okay, I'm sorry, but this is like... Really?
Also, Zelensky saying Ukraine is ready to sign mineral.
I thought it was going to be off of this one. It actually did bounce temporarily, and then it came down to this one.
First stages could be prisoners release and truce in sky.
Like, this is the thing that wilds me out about it, is that when I come and I look at where it came to, well, I guess there was this bar right here, but you just don't really get good key swings in the past that would explain why it would bounce there. But the line seems to describe it perfectly every time. I can't predict which line, necessarily, but one of those lines, they hard bounce. Kind of comes back to that, like, there does seem to be something to it, but I can't seem to use it for an entry condition.
Also adding from Zelensky, first stages of end of war to include prisoner release, immediate truce in the sky and sea if Russia does the same.
Let's see here. President Zelensky, Ukraine is ready to sign minerals and security agreement anytime in any convenient format. It is regrettable that it happened this way. It is time to make things right. That might work. That might work. This is still awfully illiquid, isn't it? So now we're getting kind of, when we were talking about cumulative delta the other day, right? I think we're getting a really clear oddity in cumulative delta here, right? So there was pretty strong buying through this. After this point, things really died down. So we saw the move completely retrace, but it was only half the change in cumulative delta, which means that now that we're seeing cumulative delta rise again, we're almost at the highs in cumulative delta. But that is a price and cumulative delta are not very correlated anymore, right? Here they are. Here they are. And then somewhere around, I don't know, like right here, it's like they stopped being correlated and you would have stopped. Right? So we don't trade it now here when it's not correlated. Or Seth doesn't trade it down here when it's because it's not correlated. You can do whatever you want. Okay. That last uptick got just dashed there. Yeah, Monday's list. Zelensky's post hits close to Mike Waltz Monday list. 3 points to resume talks. How show gratitude to U.S./Trump. Commit to the minerals deal. And apologize. Yes. Okay. Do I really like... Really, let's just circle this whole area here. I don't know what. Is that one you confirmation bias? Man, you tell me. I just... It seems to me that the model works well and shows exactly what I expect it to show. Doesn't necessarily mean that it's something predictive, but I do think that it does what we want it to. And that does give you good idea about the state of the market and places where you might want to take profits. Yeah. And the state of the market now is just being bounced back and forth between the market makers in the middle.
Also, Ontario removing US products from liquor stores.
There you go, from r/futures trading. I am struggling to find a strategy that I can prove has edge. Feel like my mental game is solid, but I am struggling to find a strat that doesn't produce random results. Yeah.
Russell 2000 index falls 2.2% to the lowest since August.
Oh, there's not much very going on. How about doing some coding? Yeah, well, I mean, it's a little bit too late to be doing that now. And we did have some stuff going on earlier, right? I'm not exactly sure what I would code at the moment. I guess the big thing is still that we want to do something that does a little bit more sophisticated order placement, I guess. I don't know. Detecting market regimes. Yeah, that is another thing. Is we could try to make a hidden Markov model type of thing. It's really probably the next biggest step up that we could do.
Canada's province of Ontario will slap 25% export tax on electricity it sends to 1.5 million homes in Minnesota, Michigan, and New York, according to the Wall Street Journal.
With regime, I mean higher dictating trends. Well, I mean, we have a lot of things to look at higher time frame trends though, right? But a Markov model is kind of a way of saying that there is a state, but we can't necessarily see that state or when it's changed. But we can see the effects from that state. And so from looking at the effects, we can kind of guesstimate the percent chance that it is in that state. And that can then be used as a filter like that. But we would want to use it in like I think that the regimes that I would be interested in would be like, well, the first one I don't know if a Markov model can do, but the one that I'm most interested in is there a large buy meta order out there, and is there a large sell meta order out there being executed? That's the most important thing, is if we can statistically measure the chances that there is one, right? And then the other one is, are we moving towards or away from liquidity? So if I come back to this chart over here, you'll get this thing where whether the resting orders are, so there's a lot more on the bid today. Okay, that's basically what that means. This right here means there's more on the bid. Here there's shifts. So do you see this thing right here? Do you see how right here at around this point, there's like a clear shift in the market? We were moving up, and then all of a sudden it flips, and somewhere in here the stacking and pulling behavior has changed, essentially, right? And what I find is that this is really, really good at identifying when there has been a change in the market, but it's unclear like what that change is. And so that's why I think there's a hidden Markov model behind it. That this combined with like the changing cumulative delta and which direction the price is going, and then you say there's a state where it's moving towards liquidity or moving away from liquidity. I guess a lot of it would be, I need to work on the sockets. Need to work on the sockets. Well, it is time for me to get going. Oh, is that resting orders one indicator? Yes, it is. So what it is doing is it's looking at the difference between like the maximum number of resting liquidity there was and the minimum amount of resting liquidity that there was, and then comparing that between the bid and the offer. So it means which side is stacking and pulling more. And what it suggests right now is that the market is kind of moving away from the liquidity. That if you've got more activity on the bid, then they're going up, and then you get more activity on the offer, they go down. But I've seen markets where it's the exact opposite. It just kind of, that's why it's like the shift tells you something, but it's unclear what it's telling you. And I think that a hidden Markov model might be able to tell you what it is actually telling you.
6th, settling on March 11th.
On the other hand, we could just pass all of these features into a machine learning thing and have it figured out, right? Pass it into a neural network. Actually, I think what I want to do is I want to be like, okay, here's everything that you're seeing in the book, and pass them into a model or a neural network that basically tries to predict cumulative delta. And that is one feature output. And then that feature output would then get combined with all of the correlated assets that you're looking at and the spreads and all those sorts of features into a second neural network that would try to predict price. That's what I think I want to do. Seems complicated. I think we can do it now. I think we got the pieces, the major pieces that we needed that we're waiting on. We just need the time. Well, they are kind of coming back up, but it's time for me to get going. I would say this is still, well, they are kind of breaking out. The buyers might be in control again. And there is some hint that the S&P 500 wants to make another run at the lows. So we'll keep an eye on it. But I do think it is kind of reacting to the S&P 500 largely at the moment. So, okay, guys, I will get going. I'll see you tomorrow. Stay excellent, team.